In this video, I'm going to cover what is money and how does it works. Before money existed, everyday life was far more complicated than it is today. Imagine walking into a grocery store with a basket of apples and trying to exchange them for bread. The baker might not want apples at all. Perhaps they need milk instead. You would then have to find someone willing to trade milk for your apples before you could finally get your bread. Situations like this happened thousands of years ago when people relied on the barter system, a method of trading goods and services directly without using money. While barter worked in small communities, it became inefficient as societies grew larger because both parties had to want exactly what the other person had to offer. This problem, known by economists as the double coincidence of wants, made trade slow and inconvenient. To solve this challenge, societies gradually developed one of humanity's greatest inventions, money. Money can be defined as anything that is generally accepted as payment for goods and services or the repayment of debts. Although most people think of money as paper bills, coins, or the numbers displayed in a bank account, money is actually much more than that. At its core, money is a system of trust. It works because people believe that others will accept it in exchange for goods and services. For example, when you buy a cup of coffee for $5, the coffee shop owner accepts your money because they know they can later use that same $5 to purchase supplies, pay employees, or buy groceries. The value of money does not come from the paper or metal itself, but from the confidence people have that it can be exchanged for something valuable. Throughout history, money has evolved significantly. The earliest forms of money were known as commodity money, meaning the item used as money had value in itself. Ancient civilizations used goods such as gold, silver, salt, cattle, shells, and even tea because these items were valuable, durable, and widely accepted. Gold, for example, was prized because it was rare, did not rust, and could easily be divided into smaller pieces. People accepted gold not only because others would accept it, but also because gold itself had intrinsic value. As trade expanded across regions and civilizations, carrying large amounts of gold or silver became dangerous and inconvenient. Banks emerged as safe places where people could deposit their precious metals. In return, the banks issued paper receipts that represented the amount of gold stored. Over time, people began exchanging these paper receipts instead of the gold itself because everyone trusted that the paper could be redeemed for gold whenever needed. Eventually, governments began issuing official paper currency, and these notes became the standard form of money used throughout the world. Today, money has entered an entirely new stage, the digital age. Most money no longer exists as physical cash, but as electronic records stored in computers. When an employer deposits your salary into your bank account, no truck delivers stacks of cash to the bank. Instead, your account balance is updated electronically. Similarly, when you pay for groceries using a debit card, mobile wallet, or online banking application, money is transferred digitally from your account to the seller's account in just a few seconds. This shift has made financial transactions faster, safer, and more convenient than ever before. Economists explain that money performs four essential functions, each of which makes modern economies possible. The first function is that money serves as a medium of exchange. Instead of exchanging products directly through barter, buyers and sellers use money to conduct transactions. Imagine that you own a bakery and sell bread for $5. Your customer pays you with money, and you later use that same money to purchase flour, sugar, or electricity. Because everyone accepts money, trade becomes much simpler and more efficient. The second function of money is that it acts as a store of value. This means people can save money today and spend it in the future. For instance, if you earn $1,000 this month but spend only $600, you can save the remaining $400 in your bank account for future needs. Unlike many goods that spoil or lose usefulness over time, money generally preserves purchasing power. However, this function is affected by inflation, which is the gradual increase in the prices of goods and services over time. If a pizza costs $10 today, but $12 next year, the same amount of money buys less than it did before. Although money still stores value, inflation reduces its purchasing power. The third function of money is that it serves as a unit of account, providing a common measure for determining the value of goods and services. Without money, comparing prices would be confusing. Imagine if a laptop cost 3 goats, a bicycle cost 20 chickens, and a television cost 5 bags of rice. Consumers would struggle to determine which products were more expensive. By expressing prices in dollars, euros, pounds, or other currencies, money creates a standardized measurement system that makes buying and selling much easier. The fourth function of money is that it acts as a standard of deferred payment, meaning it allows people to borrow and repay money in the future. Loans, mortgages, and credit cards all rely on this function. For example, if someone takes out a $20,000 car loan, both the borrower and the bank understand exactly how much must be repaid over a specified period. Without a standardized form of money, long-term financial agreements would be difficult to establish and enforce. An important question remains: why does money have value? After all, a $100 bill costs only a small amount to produce. The answer lies in trust, government support, and scarcity. Governments declare their currencies to be legal tender, meaning they must be accepted for the payment of taxes and debts. This legal recognition helps establish confidence in the currency. In addition, central banks carefully manage the money supply because printing excessive amounts of money can cause inflation. History provides several examples of countries that experienced extremely high inflation after producing too much money, making their currency lose much of its purchasing power. Most importantly, money has value because millions of people trust that others will continue accepting it in exchange for goods and services. Without this collective trust, money would become little more than paper or digital numbers. Modern economies use several different forms of money. The most familiar is physical cash, including coins and paper notes, which people use for everyday purchases, such as buying food from a local market. Another form is bank money, which exists as deposits in checking and savings accounts and is commonly used to receive salaries or make transfers. Electronic payments have become increasingly popular through debit cards, credit cards, mobile payment applications, and online banking, allowing people to make purchases almost instantly without handling cash. More recently, digital currencies, including cryptocurrencies, have emerged as an alternative form of money that operates using blockchain technology rather than traditional banking systems. Unlike government-issued currencies, however, cryptocurrencies can experience significant price fluctuations and are not universally accepted as payment. In conclusion, money is far more than paper bills, metal coins, or digital numbers displayed on a smartphone screen. It is a powerful social invention that enables individuals, businesses, and governments to exchange goods and services efficiently, measure value, save for the future, and conduct financial transactions with confidence. From the earliest barter systems to today's digital payment technologies, money has continually evolved to meet the changing needs of society. Every time we receive a paycheck, purchase groceries, transfer funds online, or tap a payment card, we participate in a complex global system built on trust, cooperation, and economic exchange. Understanding what money is and how it works not only helps us appreciate its role in everyday life, but also provides the foundation for learning about personal finance, banking, investing, and the broader economy. Thank you for watching. If you enjoyed this video, subscribe to Budget and Build for simple, practical finance videos that help you take control of your finances.